Yo, what's up, gang? It's Jeff, Stock Swinger, popping on. It's Tuesday night in the Pacific Northwest, about 10 o'clock my time. Hope none of y'all are freaking out over there, panicking. I've seen a lot of freaking out, and why isn't this thing moving, and blah, blah, blah. All the numbers are there. We know that. I mean, look at the short borrow fee, the 217%, 81%. I mean, it's madness. We all know that, right? But again, remember who we're dealing with here. Just Citadel alone, right? Kenny G, we hate the guy, blah, blah, blah. I mean, the guy owns Citadel. He owns 85% of Citadel. The guy's been trading stocks when a lot of you guys were in diapers. You know, he did it in his dorm room when he was in college. So the guy is not a dummy. He's a multi-billionaire with a monstrous hedge fund for a reason, right? So this can be a pretty cool little video. I got a couple little things here to show you guys, but take a look-see at this here. This is 25 seconds. Listen really closely to Kenny G. This was about the economy in 2008 when everything was in a frantic panic attack. You know, everybody's going broke, bankrupt, and all that. But listen to this really quick.
So you quickly come to terms with the fact that we may not survive. And it may be an exogenous event in some sense that causes us to fail. And I have to accept that reality. And now that I've accepted that reality, what are the best decisions we can make to survive? And that was the playbook we came to work with every day. We are going to fight to survive, knowing we might fail, but we are not going to give up. So
Kenny is not going down without a fight, boys. And that's what he's going through right now. This man is coming out swinging. I think pride and ego and all the 1%er toots and suits and loots, I think these guys, he'd rather probably get margin called than try to save his company, just going down like a blaze of glory. The numbers are all there. I don't claim to be the smartest fellow they make. I'm pretty good about reading things, sifting through bull bleep, and taking my own piece and coming up with what I think is right. And I'm on the same page as most of you. We know the numbers are there, but remember who we're dealing with, too. I think that's a key piece we need to forget. Screw Kenny, and he's about, of course, but he's a lot smarter than we are, right? I mean, he's a savage. He's an absolute savage. Here's a market today. This is really all you need to see. Speaking of Kenny G, are they selling everything off? I know we've talked about that. The crypto has been going mad up and down. Are they buying crypto, getting out of crypto to cover their positions? We don't know. We would love to think so. I've touched on it. Everybody and their mothers touched on it. We don't know. Again, we do not have a clue. We might think we have a clue, but again, it goes back to our boy Kenny G. He ain't going down without a blaze of glory, right? This too, I found this very interesting by Sentiment Trader over on Twitter, the Twitter mobile. According to Bloomberg data, stocks just suffered the worst bout of concentrated selling pressure in history. Wow, that seems pretty wild, doesn't it? Jeez Louise. So let's touch on a couple other things. We'll touch on the ORTEX data and then a couple fabulous pieces I found along the way here. This here. Hold on. It's right back here. One.
that's the one.
Listen to this. This is 9 seconds, you guys, but is Kenny's words. This is, I don't know when this video was originally. Oh, May of 2013. Whatever. It's old, right? But this 8 second, is Kenny's words going to come back and bite him in the Azteca? Watch this. Listen carefully, very carefully.
That's the one thing we really seek out. Because I'll tell you what, determination and persistence almost always wins the day.
Ooh, Kenny. Determination and resistance almost always win. I think that's a little bit of what we're doing, boys and girls, aren't we? Are we going to win? I think in that full clip, I listened to some of those today, actually, too. He was talking about hiring people. They're always looking for talent, blah, 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 whatever the hell, okay? So remember, you guys, that's enough on that there. But remember who we're dealing with here, too. None of this makes sense. How this thing's been trading sideways for weeks. It's shorted to death. The whole 97%, all the math, everything we know, it makes 0 sense for this thing to trade sideways, to go up a little bit, to go down a little bit, be shorted. No shares left, 10,000 left, 200,000. None of it does. Do I have an answer for that? I have no frickin' clue. Anybody else telling you any different? Anybody else telling you where this thing's going to go is madness. I don't know. The math says 100 grand, 500 grand, all the due diligence posts. Sure, those are great. Could it do that? Absolutely it could. Is this thing going to go to $500 like GameStop? Is it going to go to 100,000? Anything in between? I have no freaking idea. And anybody else telling you is crazy. And anybody else telling you when this is going to happen is crazy. I think personally it's pretty close. I think by the middle of the June out latest. I think June 2nd's a key date. Tomorrow morning could be a key date. It's very close. But again, remember who we're dealing with, right? So here we are in the quick little Fintel. We'll take a look at this real quick. Market volume right there, 49 million. Short volume, 11 million. 23% short volume ratio. 45,000 we got left there. Let's refresh this. I've had this up for about an hour. Things kind of keeps changing sometimes in the evenings too. Okay, 45,000, 81%. We know that's monstrous, right? GME, 4.6 million, 1 million shorted, and then 22% ratio. Oh, they picked up 450,000 somewhere. Interest rate, same as always, usually right in that 1% range. And then we'll pop over to the ORTEX data real quick. We know that the big number that's floated right here, cost to borrow 239 frickin' percent, right? And then the other huge one, we know these two numbers is really, screw the charts. You know, a lot of guys like looking and reading at charts with this. I don't give a rat's ass. This thing could drop to $1, whatever. Okay, that's just not me. But 81.77, and this here is astronomical, as we know. So there's your info up there, you guys. If you want to pause it, write it down, tweet it, MySpace it, write it on a chalkboard, whatever you got to do, right? So that's that. Let's show GME real quick. GME. And then there's your GME up there. Roughly about the same, you guys. No big changes anywhere. Utilization, 1.84% change. Okay. This one here, how Citadel, this was an old tweeter feed again, how Citadel is truly doomed to fail their liquidity test on Thursday. Remember, this is on Thursday too, because of both AMC and GME. Please read. Citadel is in the biggest catch-22 of their life. Citadel found themselves in an extremely important catch-22 that involves both GME and AMC. Before anyone downvotes or disregrets this post, sorry, this was a Reddit post. I totally spaced it. Just hear me out. I very well count be wrong, could be wrong. You know what that was supposed to mean right there. It makes sense. Well, we know Citadel has a liquidity test on Thursday. AMC borrow rates 80%. GME dropped 11%. We're at the end of the how it connects. Citadel's liquidity test coming up is a huge opportunity for them to avoid a margin call. So today, to prepare, they short attack the bleep out of GME to get those liabilities down and sell some tech stocks, so boost their assets. This explains the 11% drop and a huge red day for the market, like we touched on earlier, right? By doing this, the hedgies also try and convince apes that we are falling out of more after reading Warden's DD. They realize we were hyped and they dropped the price. However, Warden did talk about a possible short ladder after the wedge, followed by a slow upward trend. Yes, hedgies, we do read. They dropped and the wedge went as expected and are perfectly fine. This is where AMC comes into play. The AMC borrow rate spiked to 80% and the price went up 10% or so. The AMC apes are hyped and the word is likely getting out as GME saw a similar borrow rate spike before the baby squeeze. This is the catch-22. If Citadel chooses to short AMC to drop the price, their interest payments will be huge and their liability will increase. If they do nothing and let AMC run, they will see the same spike in their liabilities, all before the liquidity test. Okay, so found that pretty interesting too. This one here, ORTEX, again, I touched on this a couple videos ago. Maybe it was last night. They're following this. I love ORTEX, right? But they're following this because they want to, report, document, or whatever. Probably one of the biggest short squeezes that has ever come up in AMC or GameStop. But every single day they're talking to AMC, right? This is an interesting reply to a question here. Elise Hobby, can you tell us why your number for cost to borrow is the 2XX% and why Fintel would be around 78%? Is there a difference in the numbers you're looking at, aka are they based on all shares, new shares, different type of metrics, etc.? This would help a lot of apes. And then from ORTEX, The ORTEX Securities lending data covers 85% of global security lending, where the other providers only have half the data from one broker. You can read more about it on our securities lending data here. And he broke it down. So again, you guys, I'll always remember in the community tab every day I'll post up the GME and AMC numbers in there for you guys, and then we'll touch base on them in the evening. You can find them a lot of places if you dig hard enough, on the old Twitter feed or whatever. You can find, I think Matt Kors, he doesn't post the full thing, but he posts the important stuff too. So I'll have those for you guys every day too. Okay, so almost done here, you guys. This one here, we did touch on this here, but just let this sink in really quick. This was another Twitter. Every time I got to say Twitter, I don't know what it is, so I just call it the tweeter. Okay, holy bleep and bleep. Institutional investors grew their holdings from a mere $24 million worth of security holdings to a massive $243 million. Okay, AMC is a monster stock. The honestly is acting as a hedge against bad market conditions. I'm shook. So just let that thing sink in again. I did post this exact same thing here. When we showed this graph, it was really small over the quarters, and then this was the last quarter. The quarter, it was super tiny. It was barely reading on the bottom of this. And then this one, you guys can see it. It's like 3 videos ago. I mean, that's huge, monstrous. Okay, and we're almost out of here, guys, I promise. One other couple little cool things for you, and I'm going to leave you with something to watch on your own, a little homework assignment for you tonight. Let me know what you think about it. I missed it a couple months ago, but it was funnier than crap. This is an old DFV tweet from about 3 months ago, right? And this is when he was, GME, AMC was just barely getting started, blah, blah, blah. It might have been a little bit longer than 3 months ago because this is roughly, right? DFV, I think you want a real short squeeze. You'd want a more levered company where it was a verge of bankruptcy and suddenly it's not. This is literally AMC. Now they're longer on the brink of bankruptcy, but still 80% short interest. GME is top priority, but keep this in mind. This was somebody that found it and retweeted it, but that's what DFE said over 4 months ago. Remember, this guy was the king, originally brought up the GME stuff and found that GME was shorted to death over the years, right? So pretty cool. I'm going to leave you guys with this. If you have not seen this, plug your ears. If you got kids on, moms and dads, wait for them to go to bed because it's old Eddie G. He's got a lot of cuss words in here, but he goes off on Robinhood. It's absolutely outstanding. So I'll pop that in there if you guys have not seen it. This was in February. I don't know how the hell I missed it, or it was. You'd figure you'd have found it somewhere, but I missed it. I'll pop that in there for you guys. Okay, guys, everybody stay calm. Remember who we're dealing with. That's it, guys. If you like the video, comments, all I'll ever ask. If you guys want to subscribe, would be super duper awesome. Thanks, guys. I'll see you on the next one. Bye.